Welcome to the Leafy Podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Gligoric and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hi, everyone. Welcome to Leafy Podcast. Thank you so much for being here today. Today on the line, we have our Leafy hosts, Jennifer Gligoric and Brian Price from Leafy Legal Services. And they have a pretty awesome guest on the line with us today. So I will go ahead and hand it over to them. Jennifer?
Hey guys, hey Leafy family. So today we have a really great guest on the show. He's got this very incredible podcast where he talks about real estate investing. He actually started out as a real estate investor when he was only 22 years old. And now he has tons of properties, and he's going to talk to us about his journey, how he did it, what he's doing now, how he's making the money, and how he's educating people. And he's just awesome. So we've had him on the show, and I just want to dive right into it. So today we're talking to Justin Hanna, and Justin is with Real Estate Investing 365.co, and we'll say that several times a show. And so anyway, welcome, Justin. I'm glad to have you back.
Hi, everybody. Yes. Thank you very much. Thanks for being here. And thanks for being on my show recently too. That was awesome. So yeah, I'm excited to talk a little bit, tell people my story.
Yeah. So why don't we just hop directly into your story? Why don't you just tell us how you got started? I think it's pretty fascinating how you got in there and how pretty much anybody can do it. So I think it's awesome.
Yeah, for sure. So I got started, like you mentioned, I think I was like 22 years old, and I didn't know anything about real estate investing. I didn't know, none of my family really had rental properties or anything. My aunt owned a real estate company, but it wasn't like they were buying properties all the time. So the main reason I got started was my cousin, who was like my brother, real close in age, ended up buying his first home in the Bay Area in 2009. And we were always kind of competing and everything. So I figured, well, if he's buying one, I should buy one. So it ended up luckily being a good time. I started looking right before the crash, and just took some time for me to find the right property and different things. So I ended up buying in 2009, small little houses, 900 square feet. Cost me, I think $300,000 is what I ended up paying for it, half of a duplex. But that was in the Bay Area in California, and bought that. And then, the value went up. So I ended up selling it just a couple of years later, and I had this big chunk of change that I didn't really know what to do with. So luckily I'd read Rich Dad Poor Dad and started looking into real estate investing, and kind of grew from there.
Cool. Awesome. So did you have any hardships as you started building your properties, or what's some of the things that maybe you maybe didn't do right as you kind of started to grow? Yeah,
well, one of the things that I find that holds a lot of people back is, everybody says they don't have any money, which I was 22 years old. I just got hired recently down in the Bay Area as an apprentice lineman. So not like playing football or anything, but working on power lines. I'm not that kind of big of a guy, so he wouldn't want me playing football, but I just got hired down there, and I didn't have a ton of money. My rent was like $2,200 a month for a 1-bedroom apartment. It was like, I was working all tons of overtime. So in order to buy the house, I guess that was the first hardship, is that I didn't have a big down payment. I didn't have family to give me any money or anything. So, I looked at all my assets that I had, which wasn't very much. And I owned a dirt bike, and I owned a truck. And the truck had some equity in it. And so I figured, okay, what I'm going to do is I'm going to sell my truck and I'm going to sell my dirt bike. And that'll give me enough for an $18,000 down payment, is what I had to end up putting down on the house. And I went and bought me a little like Toyota Corolla. So I went from a big lifted diesel truck, down to like this little white Toyota Corolla, because that's the only way I could buy this house. And I was like, okay, I'm going to do it. So that's kind of the first hardship. And then as the time went on, I didn't know I was real estate investing at the time, and it was just living in a house, so I didn't have to pay rent. But one of the things, that I realized is that certain things I'm not very good at. So I was doing some of the fix up in the house, like getting rid of the popcorn ceilings and, doing the kitchen and all these things. That stuff's pretty good. But on the outside, the landscaping part, I was like, oh, I'm going to do this all myself because it needs a lot of landscaping work. Well, come to find out, after a week of hitting my head against a wall and ripping out retaining walls and trees and all that stuff, I decided just to call a landscaper. And then it's so much easier. It cost me I think it cost me like $17,000 for the landscaper to come in and do everything. But in a week and a half, they poured concrete, built retaining wall, put in lawn, like irrigation, all the sprinklers, and it was done. And I was like, man, so much easier. My time, I could just go to work extra overtime and all this stuff. And then it's just like so much more worth it to just hire out the professionals at most, not always, but most of the time for sure.
Mm-hmm.
I actually think that gets a lot of people done up because they watch so much HGTV, right? So they're like, I'm going to design and we're going to go and build all this stuff. And they don't stop and consider the fact that every single HGTV team has a huge team behind it. They're all like, this is the guy that does our ironwork. This is our landscaper. This is our this, right? They focus so much on the couple or the people that are doing it that they forget that there is a team that you have to start to build or at least hire, to be able to do it. So yeah, that was probably a very interesting lesson, but it's such a relief when you're like, I can work and I can pay that off and I don't have to just kill myself because
and they'll do it much better than you'll ever do. Like sometimes you want to do the work yourself. Like I've had other properties like that I've done a lot of the work myself. But there's certain times that you just need to get the professional in there and get it done quickly, and time is worth more than what you pay them a lot of times. So
and I think a lot of times if you're fairly good at it, sometimes it gets in your way too. Is that if you're like, oh, I'm pretty handy, so therefore I can do all the work, but then it takes you months and months of doing it, it really can take its toll. So yeah, definitely. You can do a lot of stuff in parallel at the same time so that you get it out and fixed up as fast as possible.
Yeah. And depending on where you're at in your career, right, in the beginning, like I was still at the relative beginning, but I had been lucky enough that was maybe a year and a half into owning the home. So I was able to save more money. I didn't go out and blow all my money. So I had some money saved up. But depending on where you're at, if you're at a point in business where you're real busy all the time and you can be doing the $500 or $1,000 an hour work, there's no reason you should be out doing the $20 an hour work, putting in sprinklers or putting in the lawn, you know what I mean? As long as you optimize that time and go do something else more productive.
Yeah. Highest, best and use and purpose of your time. You have to always think, what's the highest and best, use of my time right now? And how should I allocate those resources? And because you are a resource, right? So
sure.
Yeah, you always have to be thinking about that. That brings me back to my, back in the day before I had a kid, we bought this house, me and my ex, and we renovated it ourselves. Every bit of it. It had not been touched since like the 1940s, right? And so we would both work full time, and then we'd go to this house and we did everything. Like we took the lead paint off without respirators. I mean, it's amazing I'm alive with everything that we did. And we were there pulling up and trying to put hardy plank down to be able to put tile in the kitchen. And I had blisters all over my hands. So I had socks on it as I was trying to sit there and screw this hardy plank in. And because I could only get the electric drill to get it down so far. And then I did it. And I wasn't familiar with power tools. So my ex took it and he goes, I wonder what happens if we move this dial. He moves the dial and he goes, I don't know. And he just handed it back to me and it went all the way down. I didn't have it done the as far up as you need to be able to get through it, right? So I had it I guess, not strong enough. So I'm looking there at my bloody hands going, man, I'm an idiot, right? Like, I'm an idiot. We both laughed about it. I still think about that and go, man, why don't we just pay someone? It was torture. I'd never do that again. I used to pay it. So then, okay, so you had your one duplex, right? And then you sold the duplex, and then you got, what else did you get? Tell us where you went from there.
Yeah, so it was actually just a half of a duplex. So I don't know, at some point they did I guess they didn't market it as a condo. They didn't market it as a single family house, but at some point they separated the two sides and then sold them individually. So yeah, I had that single family property, and then I ended up selling it like maybe 2 years later I guess 3 years later in 2013. And then my wife and I wanted to move back to our hometown away from the Bay Area, which is up in Northern California. So we decided to buy a home back in our hometown. With the proceeds, we put the house on the market and then made a contingent offer on a house back home, contingent upon the sale of that first house. So everything went well. We got the house that we wanted to buy, and we sold the house that we, listed in the Bay Area, and we sold it, I think, for $400,000. So there was $100,000 gain there in like 2 years and 6 months, which you know, by the time you think about what you put into it and paid your taxes and insurance and all that stuff, you know, maybe I broke even after the time if I would have had to rent somewhere, but it ended up being a great deal. So I had, you know, this $100 and something thousand check, you know, that came to me, and half of it went towards our single family house that we're going to live in. And I thought, what am I going to do with the rest? Cause I don't want to just blow it. So I ended up finding a short sale in my hometown. And with that short sale, I bought that for, I think like 140. And, you know, that ended up being pretty much a turnkey property. 6 months later, I was able to refinance it, and I refinanced and appraised for 185. So I was able to pull out almost the whole amount that I put down on that property. You know, I put maybe 40 grand down on that property, I think. And then I was able to pull out the whole $40,000. And then I went and found a duplex in the adjacent town that we lived in, buying that property. So really, if you think about it, I really got into my first, you know, 4 properties or whatever, 3 or 4 properties with only the original $18,000 that I got from my dirt bike and my truck that I'd sold. You know what I mean? So
yeah. So that's crazy, right? It's crazy when you think about it. When you do things correctly, that sale, and some people would be like, I cannot give up my truck. I'm not going to give up my dirt bike. They will hold on to something like that. But you selling that and taking that leap and saying, I want to change, I want to make a change, right? And this is the vehicle, this is literally the vehicle, or the vehicles I'm going to use to change it. How it sprung you into an entire career, secondary career, and you already had a good one with being a lineman.
Yeah, that's true. And then, you know, I'd save, you know, I made some dumb purchases still over the time, but my main goal, like the more I got into this and I figured like, man, like I worked my ass or my butt off, you know, doing all this overtime and storm damage and working all this stuff. But I just made, you know, let's say on one of the houses, I'll make 50 grand on a house in a year. Man, like how many hours overtime did I have to work to make that 50 grand? So it just made so much more sense. So I started learning more and more about real estate and getting more and more interested in it. And then, I don't know, do you want me to dive into what I did with, you know, those next properties?
Yeah, absolutely.
Yeah.
From there, I had a couple single family one-offs that I'd bought, you know, whether we lived in it as a primary residence or I'd bought something and fixed it and flipped it, a couple of those. But what I ended up doing with this first rental that I bought, and then that second rental, which was a duplex that I bought. So I had 3 units, 2 properties. I ended up holding those for about 2 years. And then I wanted to buy more properties out in Idaho. But I wanted to scale up and get to more units. So with these specific properties, what I ended up doing was, you know, I realized that if I sold these properties, I would have this huge taxable gain. I didn't want to do that. So I found out about a 1031 exchange, which if your listeners don't know, it's just a way so you can kind of prolong paying the taxes. You don't have to pay the taxes of a sale of a property now. You can, you know, defer those and roll those into another property, and you can keep doing it over time, really forever until you die, and then the taxes are gone if you can work it that way. So what I ended up doing, I took these 2 properties, did a 1031 into a 12-unit apartment complex. It was actually 3 4-plex buildings, 3 4-plexes in one facility. And so with these 2 properties I sold, I had about a $230,000 chunk of cash that I got from them, and took that to buy these 12 units in Idaho. And still, I pretty much got these units for that original $18,000, right? Because I rolled it.
Yeah.
And now it's up into a property that grosses those 12 units. I think right now they gross $9,500 a month. And after I pay all the bills and taxes, insurance, mortgage, property manager expenses, it cash flows me like right around $3,100 a month.
Nice.
Those properties. So it's just like in 6 months, every 6 months, I get that original $18,000 back.
Right. Absolutely. It's interesting how, if you're smart with your money, how it just keeps rolling and keeps making you more money.
Yeah. I mean, that's the goal. You can lose it too, obviously, but.
Yeah. So what attracted you to Idaho? What was interesting about the Idaho property that kind of brought you up there out of Northern California?
Yeah. So I think this was in 2016, I believe, or 2017, right around there. And the thing that attracted me is just California prices kept going up. Their landlord-tenant laws aren't very friendly. You know, I had an eviction here that kind of, you know, they ended up getting out, but they owed me money, and I had to take them to not small claims, but, report them to claims. I forget what it's called, whatever.
Okay. Oh.
Yeah. To where they end up paying me, have to pay me
Right.
back, and,
Right. You
they collect
garnish
the
their
money.
wages
Collections.
and
I had to send them
collections.
So
Okay.
either way, California market isn't the best market to invest in. I don't really think for real estate, or as far as being a landlord. So I liked Idaho. We had family up there, and we're looking to move up there in the future. So I just kind of wanted to start building some properties up there for future use. So I'll be closer up there.
Okay, cool.
Yeah, a lot of people, and it's good to diversify like that and move out. And we deal with a lot of California investors, and you poor guys in California, you have a lot of extra challenges. And really,
Yes.
I wish that more real estate investors and people would put pressure on your legislators to make those challenges, to change those challenges. Really, if it's no longer working and it's starting to affect, and it has been affecting, I would say for the last decade, your poor laws and legislation has really affected your homeless crisis too.
Oh, man,
so I actually believe that if legislators can listen to the investors and the people who own, it's going to come back in win-win-win situations for the renters as well. When you skew a system towards the poorest, and when I say poorest, I meant the worst type of renters, not poor renters, because you can have some poor people who are great renters, right? But the poorest type of renters, the ones that you have to evict, the ones that don't respect property, the ones that are there to just cause problems with their community and their neighbors and the landlord. So it seems like the laws are there to protect those people. They need to change that to make it to where the laws are there for the great renters. And that way it can incentivize them and help them get into better properties. And you have to work with the investors for that. So I'm hoping that, at one point, enough pain will make you change.
Yeah, you would think,
in life and everything else. Yeah.
You would think, but I don't see that happening anytime soon. They have this could go on forever. It's such a big, complicated issue, but there's such an influx of people that are on the lower end, that don't, they're going to keep voting the way that helps out and does more and more handouts. And so it doesn't really matter how many middle class or how many business owners or investors you have. There's always more people voting the other way, because it's just like a nonstop flow of that type of ideology and things like that. So hopefully eventually it'll change. California used to be a great state, especially, back in the 70s and 80s, people were flocking here for businesses and for all that type of stuff, but it's just gone the other way. So, millions of people are leaving. And
when they lose their tax base and they lose the taxpayers in favor of the people who are just a burden, then it will.
Yeah.
Eventually it'll cripple it, and they'll have to change it.
Yeah.
There is a mix between being good human beings, good stewards of money, good help for people in need. Of course, we have to do that as humans, but you can't do it in a stupid way. There's that, the book about Ordinary, the story of Ordinary. Oh gosh, I wish I remembered it. Anyway, it was a story about a guy named Ordinary who was looking for something. It's written by it's really a life-changing book. So I hate to do it like this, but the person who wrote it talked about how there is this great balance, and it's biblical, it's spiritual, it's however you think about it. But he talked about like this one couple who went to I don't know, was it Namibia, and there was a huge famine there, and they were going to feed people and help. And so they came there and they had a farm and they started to feed people. And like the first week, you have a couple, and it became to where there were so many hundreds and hundreds of people. The wife literally went insane because she couldn't handle it. They did not ask for help. They overwhelmed themselves with it. And they took on too much burden because they had good hearts, but yet they didn't do it correctly. Correctly is realizing that there's only so much you can do, and you have to take care of yourself first. And so it's a true story. They left, they abandoned the farm. Yeah. They went back, and it took her years to recover from it. She had PTSD from everything she witnessed. Meanwhile, their story became quite like something that was talked about with this league of pastors. And they said, well, how do we prevent this? Well, this is what we can do. And then they set up a much better plan. This is our limit. This is our money. This is what we're able to do. This is how much we're able to come in, and we can't do any more than that. And once they set those limits, they were able to help, guess what? A lot more people than they would have ever been able to do before. And they also took care of themselves, and you didn't have people literally going crazy from it. Yeah.
All that free stuff is great until the rich people run out of money. So
Exactly.
And go crazy because they can't take it anymore. Or they
we've seen a lot of fluctuation in Southern California myself, is after the housing dump in 2009, which I was happy to be a victim of a little bit. And so with my investments, I mean, a lot of stuff just cut in half property wise. And so, yeah, it's had a huge impact on a lot of people down here and statewide as well. And so definitely, a lot of the new laws and stuff that are coming into effect are going to drive a lot of people out, unfortunately. Mm-hmm. And so, yeah, I agree is, finding a good place to be and invest is definitely worth, investigating. And even if you do live in California, there's so much opportunity around that, you just need to, keep an eye out of what's really working and where it's going to be good for you and your renters and rentees.
Yeah. I mean, there's still places to invest in California, and there's still money to be made, and it can still work out just fine for you. It's just don't get, people get caught up in the appreciation aspect because it's been going up so quickly over year that, my philosophy, some people's are different, but mine is like cash flow first, like make sure it cash flows, and then appreciation is just a bonus on top of that, because you never know what's going to happen. I don't care if I buy a property today, it's for $100,000, and tomorrow it goes up to be worth $1 million, and the next day it goes to zero. As long as I'm cash flowing in between, nothing really matters until I want to either draw on that equity or sell the property. You know what I mean? So that's how I look at it.
Cash flow is king. It really is, especially in this market where it's just been going up and going up, and there's going to be a bubble. Do I think it's going to be 2008? No. We've talked to many experts on our show, and people think that it's going to go not into a severe instant decline like it did before, but it's not going to continue like this. So now people are making the shift to think more about cash flow. And I don't want to rag on California too much. We help a lot of investors, but I will tell you, and it's not just because I own Leafy Legal Services, but if you don't have the right structure set up to protect yourself, and you're not doing business smarter rather than harder, and if you're still doing the old-fashioned method of LLC stacking and working in that state and trying to skirt the law so you're not paying all that FTB when you shouldn't be doing that, don't do that. That will come home to roost. It's going to come home eventually. You're going to want to get better structures for that. And if you're smarter, then you work less, you don't work as hard, and you can be, protect yourself. So, that's my advice for California investors, because we help people like that all the time. And I've seen many people who didn't have our structures, and they've lost big,
For sure. Yep.
Yeah.
Definitely.
So now what is your plan? Your plan is to go to Idaho and do what?
Yeah. So, currently, like I mentioned, we've bought and sold several other properties in between that little story that I have there. But currently, the only properties we have left is we have our primary residence in California and those 12 units in Idaho. We've sold 6 other properties that we had between California and Idaho, single family properties. So we kind of just took the appreciation that we've had, banked some of that money. And then I've invested in, some syndication funds and bigger apartment complexes. So I get some passive cash flow going. My wife and I have invested in, or we own a gym that we've put money into. So we'll have some cash flow from that when we move. And then I also am partners in a company, an acquisition company up in Idaho, that our main goal, it's not necessarily wholesaling, because wholesaling is kind of what you do if you don't have a lot of money, right? Well, I mean, you can do it either way, but if you don't have the money to fund the deals yourself, or at least the ability to get funding for the deals, then you want to wholesale so you can make the profit in the middle. But so what we do is, since we have the funds, we're buying lots of properties. I mean, lots, maybe one every 3 to 4 weeks right now up in Idaho.
Nice.
And, our main goal is to hold them as rental properties, but since the prices are high, it's hard to make them cash flow. So we end up putting them back on the market, fixing them up a little if we need to, or just put them, some of the properties we end up listing just as is. We buy it for a price and then we end up just listing it as it is. So, and this is a point I want to make to listeners, and I try to tell my listeners, is that this sounds like I mean, maybe it doesn't, maybe it sounds like I don't know anything, but I do know a little bit about real estate, but it's not because I'm very smart or that I really knew anything before. It's like been 10 years of like slowly like reading and learning and doing the process over and over again. And being able to meet my partner up in Idaho, I didn't feel like I really had anything to bring to the table to be a business partner with him, because he's got a big real estate company that does 500 houses a year. He's got multiple businesses. And it's really like a good mentor to help bring me on and teach me this new step of my career.
Mm-hmm.
Well, I've been thinking about that. What am I going to do to attract people like that, right? Mm-hmm. And part of it is the reason why I started the podcast, because if you guys go out there and start like a thought leadership platform, or like a podcast or a meetup, a real estate meetup, or something to that effect, an online Facebook group, to where you're like coordinating it, you're bringing in people, you're meeting more people to talk to and get brand awareness and just increase your own knowledge. Well, that is a part of a benefit that you can bring to somebody else, right? So what do I have to benefit him when he's got money, he's got businesses, he's got other people out there? Well, hey, I can bring like a podcast in that brings a bigger audience. I can bring a network of people that are farther above him and farther above me that I can talk to and like ask questions to and stuff that I learn over time. And then we can kind of build together. So I didn't know how I was going to bring benefit to somebody like my partner up there, because he's so far above me, but I figured it out. It took me a long time, but just think outside the box and think about what you can do on your own, that you never know where it'll lead.
Yeah, I couldn't agree with that more, because when we started this podcast, I don't think we realized how many cool people we would meet, including yourself. And how many people we've been able to help us, and all the references that we've had as well for getting us out as well. So I couldn't agree with you more with that. Is that definitely is what you've done with your podcast is awesome. You're bringing education to people that normally wouldn't have it. And I think it's key that we do these types of things as entrepreneurs, that we push this out as much as possible. And it's definitely will come back to you.
Yeah, for sure. And people are always looking. I'm sorry, Jennifer.
No, go ahead.
Say, people often, like, I have a lot of friends that ask me like, oh, how did you get there? Because at the age of 30, I had over $1 million net worth and like all this cash flow coming in and all this stuff. And I have all these friends I went to school with. They're kind of stuck at this lower level, like doing the same job they did when they were 20 years old, which is fine if they're happy with that. But most of my friends, not most of them, some of my friends keep asking me, how do I get ahead? How do I get up here? How do I do what you're doing? Well, it takes like work that doesn't pay you for a long time, right? You got to do that extra work. So I come in here and I do the podcast. It takes, you guys know how it is. It's hours and hours. And then with my real estate company up there in Idaho, it takes a long time to get things rolling with no paycheck on the nights and weekends. And I have 3 little kids and my wife works her butt off and we own the gym and doing all this other stuff. It hasn't paid off yet, but it will. So you have to just like be able to put in the time without expecting to get a paycheck for years, because just part of it, I guess. I don't know. I haven't figured it out, but I think that's
but you're still able to pay your bills. So like, don't, do these little seeds, just take one little step at a time. Because like Brian's right. When we first thought about the podcast, my thing was we have to educate people about these legal structures, because they don't know they're getting sued and they're stopped before they even get it. The people who need the structures the most are the people who haven't bought a property yet. Or they only have 5, 6, 7 properties. It isn't always the people, I hear all the time, oh, we're not big enough to need your services. And I always think to myself, hey, honey, you have no idea. This is when you need to get your structure set up, because you're limiting yourself. You don't, so let's just educate people. So we were just going to talk about our stuff. And then we're like, then Tammy's like, no. All these people we're going to talk to. And then when it started rolling, it became like this, it took a life of its own. And it's become so much more educational for us. Sometimes I think I get more out of it than anybody. And oh, by the way, we're talking to Justin Hanna. If you want to learn more about him and what he's doing, you go to realestateinvesting365.co. That's realestateinvesting365.co. You can listen to his podcast. It's really incredible. And you can find out more about how you can get started as well. So we're going to be wrapping it up. So Brian might have a couple more questions, or Justin, if you have anything you wanted to add, please do so.
Yeah, why don't you kind of tell us, where you're at now and what someone should do when they're just getting started from all the stuff that you've figured out.
Yeah. So for me, where we're at now is kind of we're getting ready to, we're in the process. We just listed our home that we're living in. We're in the process of moving, and I'm going to be leaving my job, my full-time job, which is, scary in of itself because I have 3 little kids and my wife and all that. And, but luckily I've been able to put myself financially in a place to be able to do that. Not that I'll be, it's like level 1 financial freedom. We just barely cover our bills with some of our stuff. I'm not gonna be saving money or going on lavish trips, but at least it'll put me in a spot where I can, broaden my horizon in a new industry.
Without having to worry about your water getting cut off.
Without my water getting cut off. Yeah. And a side note to that is, also because it took me, I've been in the utility industry for 13 years now. And, I did my apprenticeship and I'm a journeyman lineman. So my backup plan would really be my everyday life now, right? If anything fails, all I have to do is go back and go do line work again, which would suck. I wouldn't really like doing that because I'm trying to get away from it. But at the worst, it's like everybody else's everyday life. You know what I mean? So just set yourself
the
up.
idea that you can still have something to fall back on, and what you're doing right now, if you're gaining skills right now, that's great. You can still be on track, on the plan, and just be slowly building up your education, get that one property under your belt, and just go for it. Anyone can do it if you have a passion for it.
Definitely. Yeah, for sure. And then, my advice for somebody that's just getting started, for one, don't hold off because of where you think the economy is, right? I know a lot of people that have sat out for years because they keep, since 2014, really, they keep seeing, oh, it's going to correct next year. Oh, it's not going to, well, now it's 2020. So it's been 6 years since people have been saying that. Don't necessarily hold out, do all your research and education, listen to podcasts, read books, big on mentorship. If you can go out and hire a mentor, if you can afford that. If not, you can learn everything online. Bigger Pockets is a huge one. Obviously, number 1 resource for real estate investing. But really, it's just go out there and start doing numbers, like finding deals, go on Bigger Pockets, type in how to run numbers on a single family house, then just start doing it. Contact an agent, have them send you properties, and then start running the numbers over and over and over again. And then make sure you're just going to close on something. You got to do something. You got to do your first deal or else it'll never get done. So that's just my advice. Just make it happen. I'm
sending this podcast to so many people because they've said that. I'm waiting. And I'm like, don't wait. Yeah. Okay. Well, it was really a pleasure talking to you, Justin.
Yeah,
and
thanks for having me.
I hope we can have you on again, like after your move, and see what you're doing then. And Tammy, it's time for you to take us away.
All right. Yes. Thanks again, Justin, for the awesome podcast. And thank you, Jennifer and Brian, for being our hosts today. And I will have everything to contact Justin, his podcast link and everything in our show notes so that you'll be able to find him and ask him any questions in the future after you've listened to this episode. You can find us on anywhere that you can hear a podcast. Also on social media, we are at Leafy Legal. And thank you everyone so much again for listening. Have a wonderful day, and we'll see you next time. Bye-bye.
All right. Thanks.
Thanks.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit LeafyLegalServices.com. They are waiting to hear from you. LeafyLegalServices.com.
Follow us on Facebook, Twitter, and Instagram.
Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.